Good afternoon, Bob. Trade Genius here, 10th of January, and wanted to talk the market a little bit. It was an interesting day, and I labeled this six times the charm here. Ever since the 15th high or the 13th high for SPY, is the market has made six attempts now to break above that, and also to ring the bell for the Dow 20,000, and they just can't get it done. And today was really interesting. It was market opened down, hit the S1 pivot, and then they just ramped it for reasons unknown. I guess they were trying to make a run for it. And I mean, they literally took the market up 15 points on the ES. And then as soon as the lunch time period ended, it rolled it right back down to even, and the market's down a little bit, down a buck right now. So, it looks like they're trying to ramp the market for people to get out, but it looks like a big middle finger day if you look at a candlestick. And what I'm watching now is that to see if my momentum rolls over here, be lower, 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 and see if we can finally get that sell off. And who knows? I mean, volatility this low, it's just they're just being able to ping pong ball it. But I'm expecting a break to the downside. If you look at the VIX, so I'm short SPY with futures and with credit spreads, and I'm long this contract here, which we're pretty flat today, up 2 cents. And they've been trying to push it down every day, but it's holding. And like I said, I'm expecting. And today, I was on watching Twitter, and I saw that there's now 250,000 contracts on the February VIX 21 strike, and right now the VIX is at like 14. So that's a 50% move. So somebody's looking for some action to the upside on the VIX in February. So something to keep an eye on. If you look at oil, what a disaster. It's down. It just collapsed. I told you, and I'll tell you that there's no oil needs to fall into the low to mid 40s. I've been saying it. It's just amazing how we allow non-market players, to manipulate other people, in the speculation because they have unlimited funds. I mean, what's happening in the oil market is obviously OPEC actors trying to keep the price up, bankers trying to keep the price up, and forcing all of us to pay more for oil when the supply and demand does not really warrant it. And that's what we're seeing here. The market's supply demand, but it's also the supply of credit. And they just have so much credit that these guys can pour into it. But supply and demand always wins out over time, and you can just see it. And everybody's cheating now. It's just so obvious. And the whole northern hemisphere, in fact, it's snowing in New Zealand in June, is under snow. And so people aren't driving. They're not going anywhere. And it's just going to cause a glut. Gasoline prices fell 4% yesterday, and so we're going to get a good sized sell off in oil. They just can't keep the balls in the air anymore. And then what happens is, as this oil starts to fall, people start shorting the contract too, so they can protect their position on the producer side. So it goes from virtuous to violent very quickly in the futures market. Looking at gold, it just a little train that could. It's up there where I thought it would run into some resistance. Still waiting for it to think it'll still break over 114 here on GLD, and then probably get a little bit of a pullback. But it's rewinding on its momentum, and it looks like it's going to take another shot at it. And the reason being is that once again the yen is moving up, and so I'm still looking for that yen to get up to this area short term. And I'm long the yen, and we're long the metals through the miners. And today they were just okay, AG up 1.5%. Silver Wheaton was up 0.5%, or 2/3 of a percent. SILJ was the best at almost 3%. And then I put a buy stop out on GDX if it would hit 2260, 2270 before the close. And, it's still, that trade's still hanging out there. I'll keep it out there tomorrow. But once GDX gets over 23, it's really going to run. And then we're long natural gas. I thought it would be tomorrow before it would pop, but they're probably front running the report, and so I don't know what the report looked like. It may show a build or a bearish draw, but that big warming they talked about is already disappearing in the East Coast, and they're calling now for more snow and cold in the Northeast, and I think that's going to keep a bit under UNG. So we're in at 820. Our stop didn't get hit yesterday. I had it at 760, and now I'm probably gonna leave the stop where it is until that report comes out, and then afterwards I'll if it's not catastrophic for the trade, I'll move my stop up and see if I can get this thing to move up to 850, 860, and take 3 or 4% off of this trade. And so I don't know if anything else I really want to show you. The grains are doing fine. They're now just consolidating, moving. We'll see. We're overbought now again on them. We'll see if we can break out of this range. It needs to really get over 29.50 for us to break this range. But DBA is still doing pretty well, and it just keeps grinding higher. And this is a more broad-based set of commodities on the food space than JJG, which is simply just the grains. So I'm encouraged what I'm seeing there, and then the dollar is, not, it's underneath VWAP now. We'll see if we get a rollover in this next momentum thing, and then the trade that's working for me, it's not on the subscriber sheet, but is that I'm short XLE through puts, and I finally broke 74, so I've been rolling down 76 to 75 now for January. Tomorrow looks like I'll probably roll down to 74 and just keep taking my my profit off this trade. But I'm looking for XLE to fall below 70 within the next couple weeks, if not sooner. So the people that I'm subscribing, that a lot more in DRIP, and I think DRIP will move higher, so something to take a look at. And I think that's it. So leave comments if you want to talk about anything in particular. If not, I'll catch you guys all tomorrow. Thanks. Bye.